Good morning, ladies and gentlemen. We continue our deep dive into quality third quarter earnings that has been reported by Corporate India. And in this case, we focus Bank of India. Mr. Rajneesh Karnatak, MD and Chief Executive Officer of Bank of India, is with us. First, let's look at the numbers. There has been a dramatic improvement in third quarter earnings. Net profit for the quarter gone by rose 37% to 2,638 crores versus 1931 crores a year ago, and interest earned was 20% higher at 18,317 crores versus 15,319 crores. There is an appreciable dip both in gross net non-performing asset, which is down by 166%, and net NPA, which is down by 56 basis points. A very warm welcome to you, Mr. Karnatak. Let's look at the major earnings up front, and then we'll take a deep dive into where these earnings came from. How do you explain this 37% rise in third quarter net profit to 2638? What worked well?
Yeah, as far as our net profit improvement is concerned, if you see the data on a YOY side, our net profit now is more than 2,500 crores, and the growth is around 35% on a YOY basis. That is at the backdrop of improved operating profit also. There also we have registered a number of 3,700 crores with a YOY growth of nearly 23%. Behind that, if you see, is the improvement in the net interest income and also the net interest margins. So net interest income, if you see, our net interest income now has touched at around 18,000 crores, and the interest expenses were 12,000 crores, and the net interest income finally was 6,000 crores. There also the growth has been there. So 20% has been the growth as far as the net interest, the interest earned was there. So we are concentrating on increase in advances, concentrating on the disbursement in the advances, and overall profitability of the bank, which has helped us improving the operating profit and the net profit to a good number.
Right. Now let's dive into how both credit growth and deposit growth worked in the quarter gone by. What was the percentage rise in credit growth and deposit growth, sir, over the year ago period?
So on a global level, if we see, our business has grown by more than 12%. Credit growth has been more than 15%, and deposit growth has again been 12%. In fact, it is 12.6%. If you see within the domestic side, the incremental growth in the total business which has been there in the domestic side has been higher on the deposit side rather than the advances side. There we have grown our deposit by more than 5,000 crore over the domestic advances. Overall, if you see the numbers, our YOY incremental growth in business has been more than 1,70,000 crore. And on a sequential basis also, our business has grown by more than 49,000 crores.
Okay, what we'll do, Mr. Karnatak, is show our viewers the price chart of Bank of India over the longer term. The stock has corrected substantially despite its very phenomenal fundamentals. We saw an all-time high, a 52-week high of about 160, 165 rupees somewhere in May 2024. And from then on, the stock has corrected about 42% to its most recent low of about 90 rupees. Today, it's higher by about 3.5%, about 107. Now, look at the quality of the valuation. Price earnings ratio is 5.6. Price to book is less than 1, 0.68. And dividend yield is a fantastic 2.68%. Overall, this bank is available at a market capitalization of 47,500 crores, which is peanuts for this quality. Mr. Karnatak, let us dive deeper into the net NPAs and gross NPAs. Where were you able to recover unpaid loans from? Because not only has the percentage decreased of both GNPA and NNPA, but the actual number has also come down.
Yeah. So as regards our asset quality is concerned, in GNPA, we have closed the book at around gross NPA at around 24,000 crore. Net NPA is around 5,400 crores. And as you rightly said, both have gone down. On the GNPA side, our gross NPA percentage is now 3.69% and net NPA percent is 0.85%. Both have seen a healthy reduction. On the gross NPA, we have reduced it by 166 basis point on a YOY basis, And on the net NPA side, there also we have reduced it around 60 basis point on a YOY basis. So overall, we have seen very good recoveries and less slippages. In this quarter, if I tell you, our slippage was only 1,100 crore approximately, and our recovery was gross cash recovery was around 1,800 crores, which means that we have recovered 1.66 times of the fresh slippages which have happened. So credit cost also in the bank has come down, and so also has the slippage ratio. Now our slippage ratio during the quarter was only 0.19%, and credit cost was also at 0.39% only.
Right. Mr. Karnatak, let's look at the coming quarters. How about focusing over the next 2 or 3 quarters? What is the outlook for credit growth? What is the outlook for deposit growth?
Yeah, as far as the credit growth is concerned for FY26, it should be at around 13 to 14%. And as far as the deposit growth is concerned, that also will be managing to get it done at around 13 to 14%. That is the outlook for FY26. For us, for FY25, as we said, the guidance which we have given 14 to 15% credit growth for FY25, that we maintain. And the deposit growth of around 12 to 13% for FY25, that also we maintain.
Okay. Could you also please comment on the recovery and the write-offs for the coming quarters?
So as regards recoveries is concerned, see, last year we had done a recovery of 6,500 crore in the entire financial year FY24. Up to 9 months, if you see our data, we have already recovered 6,600 crores. So we are internally keeping a target of 8,000 crore of recovery for the entire financial year. That is the guidance that we are giving. We are very confident that we'll be able to maintain.
Okay, that's wonderful as well. You're basically saying 8,000 crores will be written back to the net profit.
Yeah, so total gross cash recovery would be around 8,000
Yes.
crore as against 1,500 crore in FY24.
Fine. So let's look at the corporate lending pipeline. From the numbers that I see, it is about 70,000 crore rupees. Now, where do you see growth coming from in the third quarter? Where were the maximum loans given to?
Yeah, as regards our sanctions are concerned in the corporate book, if you see the outstanding, we have grown by a healthy double-digit growth of 10% in the corporate loan. If I give you a sense, as on 31st December, we have a credit pipeline of nearly 60,000 crores in the domestic and the international corporate book. So it comprises both of working capital and term loans. And if I tell you the industry, it also includes infrastructure, wherein we have sanctions given for road sector, particularly in HAM sector, renewable energy, both solar and wind energy, we have given sanctions. And apart from that, there are ports and there are other industries also, like sanctions are there for steel industry, textile industry, pharma industry, chemical industry, oil industry, mining industry. These are the sanctions which we have given, apart from the new gen sectors also, like warehousing, data warehouse also, and also to renewable, as I said, renewable energy, I have already said that. Also we have given sanctions in ethanol. These are the sectors, and also in PVs, photovoltaic and batteries. So there also we have given quite a few sanctions. Overall, we see robust growth happening across all sectors as far as our sanctions are concerned.
Fair point. We are already 9 months into this financial year, Mr. Karnatak. What has been the spend on software infrastructure, IT infrastructure, and how do you see it shaping up in FY26? How have the digital initiatives at Bank of India paid off?
Yeah, as far as the IT spend is concerned, if I give you a sense backdrop of it, FY24 we had kept a budget of 2,000 crore, against which we spent nearly 90% of that budget last financial year. This year also again we have put a budget of 2,000 crore, against which we have already spent around 65% up to 31st December, and if you add the provision, it will be even higher. So as regards further detailing into that, we have bifurcated it into three parts. It is for IT, it is for digital, and also for cyber security, both on the capex and the opex side. So now the digital spending that we have done over the years, last 2-3 years, now it has been paying off. If you see our digital book, it has been improving in the RAM book. we have given sanctions of around 40,000 crores in the month of in the quarter of Q3 under the RAM book. Overall, if you see our digital book has now touched to nearly 70,000 crore of the total global loan book outstanding. So digital numbers are improving. If you see our presentation, also 22 products both on asset and liability side are now under digital, and we are seeing good traction over there. See,
Yes.
not only the business side, but also we are doing lot of digital as far as the data lake is concerned under artificial intelligence and machine learning, and lot of use case scenarios are now coming for sales and marketing for our branches, and also for early warning signals, and also for the due diligence on the credit side.
Mr. Karnatak, I don't mean to nitpick. All loan growth is excellent, but the personal loan growth portfolio has surged more than 40%. I'm sure all checks and balances are in place, but this is something that the Central Bank, Reserve Bank of India, has been extremely cagey about. Would you want to comment on personal loan growth?
Yeah, personal loan growth, as you rightly said, is has a YOY of 42%. However, if you see, our personal loan book is only 12,000 crore, and this 42% personal loan growth is the backdrop of a
Okay.
low base of around 8,500 crores as on December 23. So within that, if I tell you the granularity of it, 65% of this personal loan book is to salaried class, and remaining 35 is to the self-employed. Within that salaried class, majority of the salaried class salaries are coming into our saving account, where we have total control and visibility of the cash flows of these borrowers. Apart from that, we have put a lot of guardrails within that, like the CIC scores and other kinds of things, which are also helping us improve the portfolio. To further give you on the asset quality sense, see, one thing is that this 12,000 crore loan book is hardly 2% of our global loan book. So it is quite insignificant as on date. Not much number is there. It is less than 2%. Number two, within that, if you see the SMA1, SMA2 and the NPA number, it is hardly 500 to 600 crores. So within that, if you see, it is less than 1%. The total stress, SMA1, SMA2 and NPA, is less than 1% of the personal loan book. So as of date, we do not see any challenges in the either on the growth side or on the asset quality in the personal loan.
Right. Mr. Karnatak, I was very confident about your reply. It's just that the percentage rise is so high. Of course, on a very low base, it was, it was necessary for me to highlight this sharp surge versus the caginess that the central bank has shown on unsecured loan growth. Let's now look at, ahead. Between yesterday morning and today morning, the Reserve Bank of India has done what many were expecting it would have done much earlier, which is inject fresh liquidity into the system by OMOs. How do you see, I mean, first please explain to our viewers what is the level of liquidity in the market. Are we fairly good, or are banks facing a crunch in liquidity? And how do you see this step taken by the RBI over 3 tranches?
Yeah, so that is a very positive and welcome step which the RBI has taken yesterday as far as the liquidity infusement in the market is concerned. So if you see the data in the month of January, the liquidity has been negative by an average of around 2 lakh crores in the system in this month. Now what it has done is it has played on the cost of deposits of the banks, and cost of funds for the banks is rising. Now with this step which RBI has taken to infuse liquidity in the market, this will help us in easing that, and also reducing the pressure on the 10-year GSEC also. So that is a welcome step which the RBI has taken, and we expect that with this easing of liquidity in the system, the rates will also cool.
Okay, fair point. And our final question to you, Mr. Karnatak, any expectations from the budget, and what hopes that the RBI will now add a cherry on the icing and give us a CRR rate cut in the first week of Feb?
So as far as the RBI repo rate cut and other things are concerned, see, whatever we see the commentary from the economists and others, there is an expectation of a 25 basis rate cut from RBI as per the commentary which we see from various economists. So that is one thing. As regards the budget is concerned, again, we are very hopeful that it will be a very positive budget, pro-industry budget and pro-economy budget. and it would be a growth budget which will help not only in the growth of the economy but also overall for the banking system as such.
Okay, fine. And any expectations from the budget?
No, the expectation is a similar way that as always it has been very positive for the industry and also for the economy. So it should continue in the same manner.
Right. And your final outlook on the level of net and gross NPAs for FY 25 and 26?
So as regards our gross and net NPA for FY25 is concerned, gross NPA should be somewhere around 3.5%. Though we had originally given a guidance of 4%, we have already come down below that. So it should be somewhere around 3.5%. And as far as the net NPA is concerned, we have already reached a number of 0.85%. We should be somewhere around 0.75% for FY25. As regards March 26, I think the guidance for March 26 on the asset quality will be giving at the end of the quarter for FY20.
Wonderful, Mr. Karnatak, and thank you so much for your time. We do hope that this excellent quality of third quarter earnings get well appreciated by the market, and it's really evident in the price. From a low of 90 rupees, you are now at 107, and this gives you a PE of, like I said earlier, 5.6 and a book value of below 1. I fail to understand what the market is missing. Would you want to guess what the market is looking for despite such excellent numbers and such low valuations at Bank of India?
See, as far as the bank management is concerned, we are very concerned about for all the values for the stakeholders. All our stakeholders, whether they are equity holders, whether it is Government of India, Reserve Bank of India, our customers, our vendors, our staff, for everyone. So our duty at the part of the top management is to deliver the results, to good work at the bank, both on the top line and the bottom line, bring operational efficiencies, bring profitability for the bank. And as regards the market is concerned, it is left best to the market to take a call.
Right. Thank you, Mr. Karnatak, and here's wishing you a happy new year and more power and more business to Bank of India, along with the lower net and gross NPAs and higher net interest income and of course a net profit. Thank you for joining us. I hope you enjoyed the show as much as I did asking these questions.
Thank you so much. Happy New Year to you and your all viewers. Thank you so much.
Okay, that was, ladies and gentlemen, Mr. Rajneesh Karnatak. He's the chairman and managing director and CEO at Bank of India, where third quarter net profit rose 37%, interest earned rose 20%. There was a sharp 166 basis point reduction in gross NPA, a 56 basis point reduction in net NPA, and of course, the valuations are mouth-watering. Thank you so much for watching. Please continue with Business Today Television. There's a lot happening on the other side of this break.
Hello and welcome to Business Today. I am Siddharth Zarabi, and with me now Mohit Joshi, the Managing Director and CEO of Tech Mahindra. Mohit, welcome to our studio here. We are just literally minutes away after a long speech by President